about 5 different styles of trading that could work for you depending on your time commitments through the day. Say you have a time commitment starting at 10 a.m. Eastern every day. You still have the time and opportunity to be a great opening drive scalp trader. Here's a simple example of a potential opening drive scalp play. The stock sells off right into a key support area from a prior day, rejects that level. You can buy it with the stop low of day and use a simple trend line to the upside. Once the trend line breaks, you can sell the stock and move on. That all can happen in the first 30 minutes of any day. The key is stock selection and understanding exactly what trades you're making. Let's imagine you have a time commitment starting at 11 a.m. Eastern. You still have the time and the opportunity to be a great momentum breakout trader. Here's a simple example of a potential momentum breakout trade. The stock makes a new high on the day, consolidates above a key resistance level. Then it continues on. You can buy that continuation and trail your stop against a trend line or a moving average. Say you have time commitments that take up most of your day, but leave just an hour each day for lunch. You still have the opportunity to be a great midday overextension trader. Here's a simple example of a midday overextension trade. You have a stock that's clearly respecting a trend line. Through the middle of the day, the trend line accelerates. Once the trend line breaks, you can short the break and look to cover into the prior trend line, VWAP, or look for continuation and trail your stop through the day. Maybe you have time commitments until 2 p.m. Eastern each day. You still have the opportunity to be a great afternoon momentum trader. Here's an example of a potential afternoon momentum trade. A stock's been consolidating through the middle to late part of the afternoon. It clearly gets above the resistance area. You can enter your position and try and trail your stop into the close. Even if you only have about 30 minutes a day, and that time varies from day to day, you still have an opportunity to be a great options income trader. Here's a simple example of an options income strategy that we trade on the desk. It's managed once a day at any time of the day. Finally, we want to cover 5 key things to achieve this goal from our perspective, from what we've learned. The first one is to set appropriate expectations. We've seen it over and over. You can be great at one strategy and make 6 figures a year, but you cannot do everything. Dr. Steenbarger tells us all the time, make trading fit your life, not your life fit your trading. You have to start with really good fundamentals. Your trading psychology, idea generation, opportunity selection, risk management. These are all really important fundamentals on our desk. You have to decide what strategies fit your life. You have to identify and develop real, easy money edges in those specific strategies. And you have to forget everything else. You have to get really good at saying not now. Say not now to anything that is not your opportunity and focus intensely on what you can do. Build filters for what you can do. Study charts of what you can do. Watch tape of what you can do. Get so good at what you can do that you earn the opportunity to do what you want to do.
In today's video, we are going to go over one of the more common mistakes that I've seen over the years. It's something that at the beginning of your career, you need to fix or you'll be eliminated from the market. So stick around. Hi, I'm Steven Spencer. I'm a partner at S&B Capital. We're a proprietary trading firm here in New York City where we trade stocks, futures, and options. In order to be consistently profitable as a short-term trader, you need to identify good risk-reward entry points. At times, you may see momentum in price and think, I'll just jump onto that momentum. The problem is often when momentum seems to be the greatest and you are most confident, a move has almost run its course. And it's rare for a trader who is consistently entering at tops and bottoms to overcome both the low probability and low risk reward of these types of trades. We teach our traders to identify catalysts and then follow price action. We teach them to develop detailed trading strategies. When combining these two things, trainees can become consistently profitable. We see problems when traders develop a thesis and then become so married to that thesis and bias that they forget the context of the stock they are trading. Let's take a look at an example. What we're looking at now is a multi-day chart in Netflix, 30-minute view. And I've highlighted a few points where a trader from our desk was entering into trades. And I want to talk a little bit about whether or not there were good risk rewards, was this trader chasing momentum, and how this is going to impact their ability to be consistently profitable. So we're looking at the last week and a half. And Tesla was a weak stock starting early last week. It had started to sell off when it got almost to $700. And once it had that downward momentum, it made sense to look for good entry points from an intraday swing basis to enter into short positions. And what I've labeled on the chart entry point 1 is an entry point that the trader took, was a really nice entry point, was below $670 a share, and that led to lower prices. And in fact, that day it closed down closer to $630 a share. What happened was, because this trader was looking for Tesla to move lower, had a short bias, had a short thesis, they started to chase when it got closer to $600. And we know that, in a stock like Tesla, when it starts to get extended in a short period of time, it tends to have sharp reversals. And in this particular case, what we can see right in the middle of the chart, I've identified entry points number 2 and 3, and these were quite dangerous entry points. And so what you can see is it sold off really hard entry point 1 that day from the high 600s all the way down to around $630 a share. The next morning, it opened around 610, so it was oversold short term. And in fact, we were looking for a bounce that day because it was so close to 600. and it bounced on the open to around $630 a share. And when it started to roll over again below 620, the trader tried to enter a short trade. And what you can see is on this chart here, I drew a downtrend line. And when something's been weak, like Tesla was for the prior couple of days, and it's moved lower, what I want to see is a significant bounce up to that downtrend that's forming before I even think about shorting it. And in fact, since it's come down from almost $700 a share a few days earlier, closer to 600, my mindset is I'm looking for it to more move sideways and then start to turn back up to play a bounce, maybe back up to 630, and if it starts to hold above 630, maybe 640, 650, etc. And so it's very important to understand that a stock like this that can be volatile doesn't mean anytime you're seeing weakness intraday, you want to chase it on the downside. You want to expand your time horizon and look at what is the context over the last 2 or 3 days. That's how we're going to think about making intraday trades. And again, in Tesla, we're not really looking for short intraday scalp momentum trades unless there's a fresh piece of news like the earnings report or some sort of problem with a factory or some good news or something like production numbers, or et cetera. When there's no major news coming out, we really are thinking, in the context of the last few days, what is a good entry point? Has it run up a lot recently? Oh, it's run up from $600 to $700. Is it having trouble here? Maybe I can buy some puts when it gets below 690, or maybe I can get short against $700 or 705 or something like that. But once it's then moved down, then we're starting to shift our view, cover my short position, get out of my puts, start to look at spots to get long, et cetera. Entry point number 3 in the middle of the chart is the stock that morning started above 630 and then was dropped down to 620 to 610. It gets almost to 600. Entry point 3, the trader is pounding the bid to get short. You can't do that. Again, the stock is just, the prior day it had bounced from below 610 in the pre-market all the way back up to 630. The next day, you can't short it when on the open it was actually 640 when it's dropped all the way $30 in the first couple of hours. You need to be thinking, okay, it's come back into 600. Is it going to bounce again from this area? And in fact, if you want to be doing the opposite, you can't be chasing the momentum at that point. So when we zoom out and think about the context, it's already extended to the downside. Entry point number 4. Now, some of you might look at this chart on the right side and say entry point number 4 was the beginning of it moving higher from below $600. It was bouncing into 630, 640, and then eventually today back up to 660. You might say, oh, why were they entering short there? This is when I even saw you on Twitter talking about if it got above 605, maybe it's going to bounce. I actually didn't have a problem with this entry because in the pre-market, the stock was being sold above 600 at 605, and right on the open, it flushed below $600 a share. So quite often, when you get that sort of weakness below a big number like the $100 whole number, and you get weakness, quite often it will bounce back up to the whole number, the 100 number, the 600 area there, and right when it comes into the pre-market resistance, you can put on a short trade, but understand, if it gets above 610 there, you just have to cover. So I actually didn't have a problem with this entry number 4. It was more so number 2 and 3 when it was already extended to the downside from those intraday, multi-day moves. And so this was potentially setting up for a new down leg below 600, but it actually held 590, got back above to the pre-market resistance, and then once it took that and started moving out higher, then the buyers were in control and I was actually trading on the long side. But it's understanding the context, not chasing momentum to the downside when something's already dropped $20, $30 or so. So the second example I want to look at was actually from the morning game plan sheet today, and it was Lululemon's earnings. And if you look at the game plan sheet, this is where we break down multiple support and resistance levels. I do this every morning in the pre-market. It's based on our proprietary stock selection process. I spent 30 minutes reviewing how to do that at tradingworkshop.com. So if you're interested in finding out why I chose Chewy, why I chose Lululemon, why we developed these levels, how to attack, go to tradingworkshop.com, 30 minutes on this process, as well as 3 low-risk, high-reward trading strategies that are commonly used by the top traders on our desk. So what you can see from the morning game plan sheet, in Lulu, I outlined 3 support levels, 300, 302, and 305, 3 resistance levels, 315.80 to 316, 318, and 320, and then an inflection point. An inflection point basically means right when the market opens, if a stock is above that level, I'm looking for it to move higher into the resistance. If it's below that level, I'm looking for it to move down into the support. And so in the case of Lululemon, it opened right below the inflection. And so my first thought is, what will it do when it drops into S1 or S2? And then to understand our theme for today, which is we don't want to chase, we want to look at context. And so take a look at the daily chart on Lululemon. And what you can see is at the beginning of March, when momentum stocks got hit, this got hit with the rest of them, had a pretty good bounce from the 270s all the way back up to above $300 a share. And then for the last 3 weeks, you can see I've outlined the consolidation area. The top of the consolidation area is around 318 to 320. The bottom of the consolidation area is around 300 to 302. And it's moving up and down in that range. And so when Lululemon reports earnings and it's gapping down this morning from around the I guess it closed yesterday maybe around 318, when it's gapping down into the 310, 312 area, I don't want to chase this on the short side. I know I have my inflection level. If it's below 310, I can short it and look to cover into S1, see what it does at S1. If it moves below S1, get flat into S2, and then I'm starting to think about the long trade. And the reason I'm thinking about the long trade is you can see in the game plan notes, I wrote strong results, same-store sales up 21% year over year, and 94% online growth up year over year. These are very strong big picture numbers. And so in that case, if something drops from the inflection down to S2 especially, I'm looking for other momentum hedge funds, momentum traders to look to buy into that area. Let's take a look at the zoomed in intraday view. So what we have there is S1, S2, and S3. And if we look at where we're consolidated in the first 30 minutes or so, you can see buyers stepped in at S2, and sellers, once it was below S1, they were selling it at S1 before it eventually traded down to S3. And so what you don't want to do in this situation, what is not a good trade, is noticing that the first move is down. So you're like, okay, the first move is down. Maybe sellers will be in control today. When it gets to S2, and you see that initial pop back up to S1, And then the second time it comes to S2 again, and there's buyers there again. The third time, what you'll see quite often is people start to short it and chase it and hit the bids there at 302. But at this point, you need to understand that you've already seen buyers step in there twice. The stock is already, when we look at bigger picture context, I've already showed you the daily consolidation area. And we know that since the big momentum blow off bottom at the beginning of March, this stock has been between 300 and 320. And so you have another reason not to hit the bids and not to chase and not to hit down here. And so when it finally does break below S2 there, $2 lower is S3, the bottom of the multi-week consolidation range, you should not be shorting there either. If you're going to be shorting this stock, it's going to be when it bounces from S2 back up to S1, because that's a good risk reward. You know that until it starts to hold above S1, you're not looking for it to move back to inflection. So that's actually an okay entry. I tweeted this out. I traded it on the long side on S2 right on the open. I got a little bit more long into S3, and eventually when it got back above S1, it moves back up to inflection to 310. So from an intraday perspective, a lot can go on. You can trade it on both sides, but you have to have a detailed trading plan, and you need to understand not to chase it. And in fact, when it bounced back up to 310 and I got flat before we filmed this video, I'm not going to start then buying it at 309, 310, because I know that's where it sold off $10 from or $8 from right on the open. I'm going to see what happens when it gets to that price and pulls back. And it's understanding the bigger picture context and not chasing momentum on the upside, in that case when buyers finally started to take over control when it got back above 305. Today's lesson basically is, it's not enough to have a thesis, it's not enough to have a bias. You have to develop a detailed trading plan, you have to put in your support and resistance levels, and then judge intraday, is it extended coming into this level? Multi-day, is it extended coming into this level? And develop your plan and trade based on those things.
Fundamentals trade. What you're going to learn in this video, you're going to learn a changing fundamentals trade. You're going to learn how to develop a system for how you will trade the trade. We're going to put together multiple variables in this trade, and you're going to learn for yourself how to do that to make better trade decisions. We use the big picture, technical analysis, long-term and short-term, reading the tape, a news catalyst. Sometimes we call that intraday fundamentals, and intuition. That's something you develop when you get a little bit more experience as a trader. But we're gonna teach you how to exit a trade. We're gonna call that, and have called that, reasons to sell. Study, study, study a winning trade to grow. We say to playbook a trade. You're gonna learn that. And as always, we hope that you walk away with the biggest gift from videos like this, which is how to think through a trade like a pro. A changing fundamentals trade. So what am I looking for to cue up that this could be a changing fundamentals trade? Unusually good news. The news should be unexpected, should be better than the street has expected. I like to think of it as, hey, if you are a big money trader and you got the news that's hitting the wires, would you feel confident to put real money behind this idea? And if you would, that's going to make it more likely that there's going to be this big money that comes into the trade over a consistent period, so that it makes the trade trend and be easier to trade. And that's what we want. We want to see this inflow of money that's coming into a stock because the news catalyst is unusually good, unexpected, and better than the street had expected. We want to see the stock gap up. That's going to indicate to us there's interest from big money traders, and we want to see volume increase in the pre-market. That gets our attention. So one of the things I like to do when thinking about particular trades is to craft an overall strategy for how I'm going to attack a particular opportunity. So if I'm making a breaking news trade, I want to have a general framework for how I'm going to trade a breaking news trade. If I'm making a relative strength trade, I want to have a general framework for how I'm going to trade that strategy. So in that spirit, when we're making a changing fundamentals trade, I want to have a general strategy for how I'm going to trade this particular setup. So I want to see unusually good news and better than the street expected. I want to see an opportunity on my longer term technicals for the stock to be able to go up without much overhead resistance. I want to have it sort of have this path to its next significant resistance level. Some space there. There should be a gap there, because I want this trade to be easy. I don't want to fight it out every 50 cents. I want it holding above VWAP, preferably. I want to see the stock gapping up over 3%. I want it to have elevated RVOL, relative volume. I want it to be doing more volume than normal on this given day. I want it to be holding the gap or above the opening range or above VWAP to be getting long this particular idea. I want it to be relatively stronger than the market. I want to see buying interest that's apparent and early. I trade this as a trade to hold with a reason to exit. So I'm not scalping this idea, and I'm clear about the reasons for exiting this trade. I will give you some before the end of this video. What is your system to trade the changing fundamentals trade? What is your system? Before you trade this trade in real time, you should have laid out how you're going to attack the strategy based on your cognitive and personality strengths. That's a huge advantage when you do that, because now you're narrowing your focus on less variables to make decisions. The big picture for this setup, remember, that's one of the variables that I'm using when I'm making a trade. So I want to get long a stock, better if the market overall is strong. If we're up against really significant overhead resistance in the market, or the market is really weak, my longs aren't going to work as much. Okay, so I start with, hey, how is the overall market doing? Where are we in terms of resistance and support? Is the overall market going to be a drag on my idea to find a way to get long this idea? So we get the market continues to rally from 2018 low, put in several weeks back. After that pullback in the market following the lowered Apple guidance, the markets were trending in full-fledged rally. after Friday, after the Fed Chairman Powell commented that they wouldn't hesitate to change their views and decisions regarding shrinking the balance sheet. So we had a precipitous move to the downside around the Christmas holiday because the Fed Chairman commented that the Fed was on autopilot as to whether or not it was going to increase its balance sheet. The market did not like that. The number one reason why the market went down during the Christmas holiday season was because of that comment. The market did not like that. And then they walked that comment back after the market had gone down a ton, and we're bouncing, and we're in the process of this bouncing, but nowhere near where we started from. We're in that process of bouncing because they've walked back that comment. So you got to know that, and that is going to be a big factor for trading your longs on a day like today. We're going to have a bid in the marketplace. That's going to make all longs more likely to work. If we were trying to get along this idea right after the Fed chairman had announced that they were less likely to increase the balance sheet and that they were on autopilot and not going to increase the balance sheet, our longs were going to be way less likely to work because the market overall was selling off. So we want to know the big picture. You see SPY daily, huge sell-off, break down from that 260-ish area, go all the way down to 234, and are in the process of bouncing, but still not up towards that 260-ish area from the breakdown. All right, good. This is a good way to prepare for a trade. On our 30-minute, you see we've bounced off the bottom in a nice strong uptrend, particularly since we got above this 250 area, particularly since we got above this downward momentum triangle that we're breaking above, getting above that 246 area. All right, so we're in a short-term uptrend in a medium-term downtrend. Intraday fundamentals, important, and this is going to be a huge driver for the stock. The green area that I highlighted is the reason why we get interested in the stock. When we make good trades, we go back and figure out why they worked. This is why the stock worked. This is why the long worked. These words highlighted. Learn to understand what really drives stocks, what makes them go up and down. There is certain news that makes them more likely to go up. There's certain news that makes stocks not only more likely to go up, but to trend and be strong and to be stronger than the entire market on an intraday basis. This is that news. This is that type of news. Understanding, learning those types of news catalysts that come out is super important. So lots of times on the internet, people will say the only thing that matters is price. Okay, not true. Or some people will say the only thing that matters are the fundamentals for a company. Not true also. Price does matter, but as an intraday trader and as a swing trader, you can use key news catalysts, see the patterns that develop after news catalysts that repeat, the most significant of the news catalysts that drive stocks up, and learn to use that fundamental news to make better trade decisions. That news catalyst is Roku announced 40% year-over-year growth in active accounts, and that streaming hours are up 68%. They are growing. More people are using their product. More people are using their product longer. That is the most important thing when you're taking a look at a company's fundamentals. You want to see that they're growing. Okay, before every trade, we want to know the ATR, average to range in the stock, how much is it likely to move? It moves 2.75. That's a good amount. What's its daily volume? In this case, 8.8 million shares. I like to trade stocks between 1 million and 10 million in volume. That's sort of my sweet spot. It's my sweet range. RVOL elevated, 4.7. So in this case, doing almost 5 times the normal average volume. Short float, not too high, about 10%. Institutional ownership high. Want to know those things before I trade every stock. Want to get a handle as to how they impact price action. Okay, technical analysis on the weekly chart for Roku. You see it's sold off a ton. High was 77.57, sold all the way off towards 25, and is trying to rebound. So it sold off a lot, and to me, as I'm looking at these longer term charts, we've got a clear area to 45, and after that we've got a clear area to 50, and then 55. So we've got some really good space to get to the upside if we can catch a bid here. Technical analysis on the daily chart. So Roku was hit hard by the correction starting in October, declining more than 66% from the peak to the bottom, put into 27 when the market bottomed. And then Needham named Roku its top idea for the year. So again, it's sold off a lot, and it's got some room to go to the upside if it has a good news catalyst. And in this case, it does. Technical analysis on the 5-minute chart. Roku broke out from its week-long consolidation from 30 to 31. So we got a week-long consolidation between 30 and 31, and it breaks above there. The strong market following the walk back from the Fed helps us a little bit as well, and we're holding the morning gap up, continuing higher in the news of the day, likely squeezing a lot of people leaning heavily on the short side in certain tech names, and perhaps specifically in this name. Technical analysis, a SPY overlay. We got big volume holding the gap on the open, holding above you up cleanly as well. Roku gaps up $3 from yesterday's close. We're getting that gap up, one of the variables we wanted to see. Roku trends the rest of the day, staying far above you up with good relative strength to the marketplace. So remember, we talked about we want a stock that's stronger than the marketplace. We want something independently stronger than the marketplace. Talked about we want something to stay above VWAP. We talked about we want a stock to gap up. We want to have a good news catalyst. Got all of these things. Our trade management for the trade. So we gap up. We like that. We're interested. We like the news catalyst. We like the longer term technicals. We open and we're not trading below 37. 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 We're finding support on the tape at $37. Okay, so That is our first trade decision to scale into a position around 37 bucks. We like the news. We like the longer term chart. We like the overall market. It's holding above VWAP. It's gapped up. Its R-vol is high. The tape is strong at 37. They're buying it there. We've got all of these variables on our side. We want to put together multiple variables as we discussed. I see traders perform poorly, particularly retail traders, particularly independent traders, who don't know how to put together multiple variables to make better trade decisions. We're not just making a decision here based on price action. We're not just making a decision here based on the technicals. We're not just making a decision here based on the fundamentals. We're not just sitting here making a decision based on our intuition. We're not just sitting here taking a look at the overall market and making a trade decision. We're putting all of those things together. The big picture, the longer term and short term technicals, reading the tape, news catalyst, intuition, all of that goes into making a better trade decision. And if you can get into the habit of doing that on every trade, or if you can take what works for you and start to add a little bit more in terms of variables to your trades, they're going to be better, more profitable. You can trade them bigger. All right, we sold half into the pop. Just take a little bit of risk off. We're going to add back when we're not trading below 38, holding. And we're going to sell into the next pop, take a half a tier off into strength. We're still long. Okay, and then we hit our target, which was 40. So we're going to take some off, and we're going to leave a little bit on until our last reason to exit appears, which is we start to break below this consolidation area. This is different. We're not going up anymore. If you look at the chart, we don't have a period of time where we pull in, make a lower high, and then go lower. We pull in, we make a lower high, and go lower. That's an exit signal for us. Now, I do want to say this. I provide this as a guideline for how you can think through the trade. There's more than one way to trade this. Some people will get bigger here and hold it longer. Some people will get smaller here and hold it longer. Some people will get bigger here, add more here, sell less here. You have to develop a trading strategy that works for you. What I hope that you're learning from this presentation is that you should develop a system that works for you. Welcome to Copy This. A great way to learn how to trade is copy the masters, and then after copying the masters, go on and do it yourself. So happy for you to copy and then figure out based on your cognitive and personality strengths what you do best and go from there. Happy for you to do that. But you should have that goal of being able to do this yourself. Copy us, copy me at the beginning. But I certainly hope that you go on to be your best trader, and happy for you to take a little bit from this to use it to do that. Copy at the beginning until you don't need us, and very happy when you don't need us. Okay? All right, remember us when you're a big trader, but excited for you to get to that point. And I just conceptually, we want you to be as good as you can be. We want you to be the best trader you can be. We want our guys here at S&B to be as good as they can be. We don't want them to be as good as the next guy. Our best trader is the best trader because he wants to be the best trader. He doesn't want to be the second best trader. And I hope the third best trader wants to be the first best trader here. And you should be pushing yourself to be better. You should not settle for where you're at. You should be putting in the work to get better. You will get better if you do the work. And this is part of that. This playbook exercise, this creating variables for your best setups is how you do it. All right, so I talked about reasons to sell here. And in your system, you want to have some reasons to sell. So yeah, a blueprint that you can work off of might be you hit a price target. You hit a price target, so that could be a reason to sell. Holds below an important consolidation area, that might be a reason to sell. Maybe it holds below VWAP for the first time. That can be a reason to sell. Maybe there's breaking news in it. Maybe the positive news is not as positive as we thought, and there's some breaking news that that's harming the price discovery. Maybe it breaks the trend line. Maybe it's substantially different on the tape if you're a good tape reader. Maybe it's too hot. It's too vertical to the upside. The key takeaway is happy for you to copy this right now, but then develop your own reasons to sell. And remember, okay, so we thought it was a little bit too hot. It hit our price target. It's holding below consolidation. We're using those predetermined reasons to sell to help us make better trade decisions. And so when you're in the middle of the trade, you don't have to sit there and think, why should I sell? How do I sell? Should I sell? What should I do? And be losing that energy and thinking those thoughts as opposed to, okay, I'm going to sell when I hit my target. I'm not going to get flat because that's not with my system. I'm going to get flat when we get below the last consolidation area. Okay, I'm going to sell if we get too hot. Now, when you see that and you recognize that in the market in real time, you are just reacting. You have less things to think about. If you don't predetermine these exits, there's too much to think about. The market's too fast. So that's why we do this. All right, always want to go through a trade review after the fact. So what you learned from this video